The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. Today is Thursday. It's about 12:45 Chicago. It's January 23rd. I opened up the webinar about 10-15 minutes early. The reason for that allowed me to go over some of the disclaimers that I have to present before I give a presentation. My thought is if I can get that out of the way early, because let me start over. It's important that we talk about that. All right. So I go into, instead of just throwing this up in front of you and saying, hey, take a look, and then throwing it back down, I like to take about 5 or 10 minutes to talk about it. The risks that are involved in trading futures. Okay. Because I've been around the block for a while, and I really have seen the good, the bad, and the ugly when it comes to trading. So my thought is, hey, let's open it up maybe 10-15 minutes early. I can knock that out. So then we can, spend a good hour going over the trade setup, and then going inside a live market and putting trades on and taking them off. Okay. So that's kind of the game plan. All right. So number one, I'll go over the disclaimers. Number two, we're going to go over the trade setup. For those guys that are brand new, this is a great syllabus for you to lean on. Okay. The setup is going to be right in front of you. There's basically 4 steps. I know it says 3, but there's basically 4. You'll hear some of the buzzwords, some of the language that Michael uses. I'll go over. So when you're in the room and it's day 1, day 2, you can absorb what's going on. Okay, that's the game plan. Okay. Just wanted to make sure my volume was up. So this is going to be something that you can lean on. Okay, we're going to do everything in slow motion. You're going to have an opportunity to ask questions. So please raise your hand. Okay. Again, idea is to give you an eyes wide open approach. So at the end of your trial, when you get an offering from CFRN, you can maybe say to yourself, I really tested this thing out. Do I want to pursue this or not? If so, then you can raise your hand. Okay. So please ask questions along the way. Okay. And then, we're going to dive into the markets. We're going to look for this same setup, but in a live marketplace. Okay. So I'm gonna get inside the DOM, get my marker out. Okay. This tower here, this is called the depth of market. This is where we do our buying, and this is where we do our selling. The same thing that you see in the trading room, okay, is what I'll be doing this afternoon, but in slow motion. All right, so if we have a setup over here, I'm gonna move our mouse over into the DOM and show you how to enter a trade, how to put the stop in, how to trail the stop, and when to take profit. It's all gonna be transparent in front of you, okay? So that is the game plan. In fact, if you are a CFRN member, because many of you guys pop in here in the afternoon, this is an opportunity for you to ask questions, but also if you're spinning your wheels, let's try to knock that out. What questions do you have? Where do you find your difficulties? I'm in the room every single day. I'm not talking every day, but I'm in the background. I'm letting Michael do his thing, and I know the setup. I can teach the setup. I can support the setup. Okay. Along the way here, over the 8, 9, 10 years I've been in the room, I've seen some of the common traps pop up over and over and over and over again. I'm going to bring those up and give you some solutions on how to attack that. Okay. It just seems to be an easy thing, but when someone puts it in front of you and says, here, this is what you're experiencing, this is a solution, maybe the way I present it, get you through that barriers to get that mental block out of the way, or get you through any troubles or roadblocks you have with that. Okay, so any issues that pop up. So again, if things pop up, I'm things that I've seen over the years, I'm gonna make it apparent, and then we'll knock those out. Okay. So that is the game plan. So we're going to spend an hour in here. We do it every Thursday, and it's an opportunity again for everyone to see this thing in slow motion. So at the end, you guys are a little bit more educated, and certainly if you're new, this is going to be a great syllabus. Okay. Now, advance warning. As you can hear in the background, my phones are buzzing. Throughout the webinar, I might have to put you on hold. I'll probably hit the mute button. You might see me mucking around with the charts because I do have clients that are calling. So it just depends on what's going on and what's happening. So just give me advance warning before. Okay, so that's a possibility. All right, let's dive into what I have to talk about. And again, I've been around for almost 25 years, so I take this serious, and I know this isn't the great rosy way to start a webinar, but this is an eyes wide open approach, right? So it starts with the risk, it starts with the disclaimer, so we might as well talk about it up front, all right? So here's my experience, all right? First of all, if you're brand new, this disclaimer really is for the guys that are brand new to our space. Okay, the guys that are getting the emails or marketing pieces. Hey, this is a great opportunity for you, to make money. But a lot of times when you get those marketing pieces, it's not balanced with the risks that are associated with it. Okay, this is a leverage market. We're dealing with futures. Okay, so what this says is, you can lose everything and some in your trading account if you're not doing some of the very simple things that I've seen over the years. One, you don't have a trading plan. Two, you're not using stop losses. Three, you're just ignoring your trading account. Four, you're not in tune in the market. You're not seeing what's happening in front of you. Five, you're not in tune with what the news items are in for the day. Okay, if you ignore those 5, 6 different little things along the way, man, this disclaimer is going to hit you right smack dab in the face. All right, and I have seen it. Okay, so that's what this is talking about. Okay, if you're trading futures, all right, you're dealing with a leverage market, and you can lose everything and some in your trading account. It also says the funds that you put in that trading account should be risk capital. It should be funds that you can afford to lose and still pay your bills on a daily basis. Okay, so that's part of the disclaimer too. All right. Also, past performance is not necessarily indicative of future results. Okay, so what might be working today might not be indicative of future results. So basically, if we have an indicator set and it stops working, hey, those results might not be the same. Okay, the bright spot. Okay, because this is a down moment, and this is again not a crazy way to start a webinar, but here's the positive. All right, number one. Okay, get my marker out. Every trade, as I said about the disclaimer, there's a handful of things that happen. If you don't do those things, you'll become a casualty of the market, right? One was a trading plan. Okay, well, with CFRN, we're going to go over a trading plan, right? So number one, that kind of checks that box, right? We're going to have a trading plan. Number two, every trade has an 8-tick stop attached to it. It kind of checks that box, right? Number three, we're going to be looking at the market on a 4-tick range chart. So basically, we're going to be looking at the market under a microscope, okay? So we'll be engaged in the marketplace. So it kind of checks that box too, right? CFRN will tell you, and it's part of the blueprint, they don't trade around news items. Well, you'll have to be in tune with news items, so it checks that box. And number 3, or number 5, I should say, get rid of this, switch guns here, is that you're going to be inside of a platform. You're going to be inside of the DOM. Okay, that's a crazy thing here. We call the tower the depth of market. So you're going to have to be engaged in the market. You're going to have to be engaged in your trading account because we're going to do a lot of buying and selling inside the DOM here. So it also checks that box too. So the bottom line is this. Okay, I just started a webinar off talking about the risk associated with trading, right? And it could be risky and you can lose everything and some in your trading account. And I went over the reasons why those things happen. But I also just highlighted the fact that if you go down the CFRN path, you check a lot of those boxes off, okay? I'm not saying it completely wipes away the risks altogether, all right? But you're doing all those right things to keep you from becoming a casualty of the marketplace, all right? That's what I'm saying, all right? And this is real, it happens, and I've been doing this for a while, okay? So that's why I talk about it. What usually happens is when people are knocking on the CFRN door, okay, they've already been to this guy, and they've done this and that. So they're pretty numb to the disclaimer. They know what this is all about, okay, losing dough. That's why we're knocking on the door here, all right? So again, I always cater this to the guys that are brand new because you guys aren't familiar with what the markets are, what futures are. You're usually brand new. You're just getting these marketing ideas that, hey, you can do all this and only risks, little amounts of cash, and you get hypnotized. And a lot of times that doesn't get balanced with the risks. That's why I'm bringing it to the table here up front, because again, we're discussing an eyes wide open approach to the CFRN trading method. Okay. All right. What else? My relationship with CFRN. That's what this slide highlights. All right. So here are the dudes. I'm Bert. I'm with Daniels Trading. Okay. Then down here we got Mike, and we got Dwayne, we got Valerie. Okay. And D, basically he does the Logic 247. He's doing the radio program in the afternoon. He's doing the concierge trade alerts. Okay. We got Mike. Mike is inside the training room in the morning from 8:30 to 10:30. Mike is the moderator. Okay. He's going over the trade setups. He's executing the trades. He's answering all the questions. Okay, he's at the tip of the spear inside the training room. And then we got Valerie. Valerie is the support. Any emails or questions you have about the setups or videos or things that are going on at CFRN, Valerie's a good support person. Okay, she responds to emails and phone calls real quick. Okay. So that is the cast of characters, okay, for the most part, okay? Bert doesn't work for CFRN, and CFRN doesn't work for Daniels Trading, okay? That's a big no-no, and there's a big line in between us, okay? Basically, what this slide is representing is, look, it's their indicators. They're the educator. It's their indicators. We have a third-party relationship, okay? Basically, let me switch guns here again. Their indicators, okay, are built inside my platform. The platform that I'm showing you is DTPro, okay? This is the indicator set right here in front of you, okay? Right here. So I support the platform. Any problems downloading the platform, you call me. Any problems downloading or getting the indicators running, you call me, okay? The good thing is everything's built inside of it, all right? So with a few left clicks, indicators, CFRN, they're all there, okay? All you have to do is a few left clicks and they're applied. So it's pretty darn simple to get them up, and I've done some videos and stuff to help you get through the install process, okay? So you have that going for you, right? So that's what I represent. Daniel's Trading Platform. If you decide to go down the CFRN path and you decide, hey, I'm going to open up a trading account and pursue this, then I handle the execution, the brokerage, and the account opening process. All right, that's my role. And then I'm taking it a step further. Every Thursday afternoon, for 1 hour a day, I go in and hold a class on the setup. I do it in slow motion because over the years there's been a demand for people. They're raising their hand. They're saying, "Hey, slow this down, slow this down." Um, uh, I want some more time, and so I decided, hey, I'll do it because I've been around. Okay, so that is the role, and that's what this slide tells you what's going on. Okay, our relationship with them. In the end, if you decide you're going to go down that CFRN path, any exchange of money, PayPal situation, that's between you and them directly. Anything with Logic 247, okay, that's between you and CFRN. Anything on their website, videos, members areas, Thursday night workshops, um, password issues, getting on their site in the members area. Just reach out to Val and she'll take care of it. Okay. In the end, if you called Val and can't get a hold of Mike or Dwayne, yes, you can call me. I'll somehow get a hold of somebody and say, hey, you know what? Bart asked for someone to call him. Can someone give him a call? So that's fair game. Okay. But again, these are the two basic disclaimers that I have to go over before presenting. And like I said, I've been around long enough I've seen a lot of this stuff. So I make it a point to take 5 or 10 minutes to go over the risks that are associated with trading futures. It's a reality. Okay. So that's it. So now, let me sip of water here. We'll go over the trade setup. Okay. So the guys that are brand new, this is your syllabus you're going to lean on a little bit. Okay. And again, ask questions along the way. All right. So the first order of business is the time frame. Okay. We are on a 4-tick range chart. All right. So if you have DTPro, how the heck do you get there, right? Chances are you're on a time-based chart. Okay. Might be on a daily. Okay. The platform has daily charts. You might be on, if you're following logic, you're on a 30-minute chart, or you might be on a 5-minute chart, right? That's if you're following the logic program. Okay. We want to get it down to a 4-tick range. All right. So what you do next to the time frame in the top left-hand corner of the chart, hit the drop-down box here and select custom, and then select range bar. Okay. Make that one look like a 4. Now you're staring at the S&P E-mini on a 4-tick range. Okay, that's what it looks like. All right. The first trap that people really fall into is they go down the custom, but they select tick bar. Okay. In the CFRN world, we're talking about 8-tick stops. Everything's kind of, we got a common denominator in the room. It's always ticks and trading in ticks and risking ticks and getting 8 ticks. And so normally people will go to this tick bar and they'll make that 2 look like a 4. And so this is that same chart. If you're staring at something like this, whether it's crude, gold, ES, whatever, you fell into the first trap, which is fine. You want to get on the 4-tick range. And the tip off really is this guy here, parentheses, R, okay, kind of that little thing right there. That's kind of the tip that, hey, you're on a range chart, okay? And one of the things about the range chart inside the room, number one is the height of each candle is 4 ticks in height. I know some of them look bigger and smaller, but trust me, they're all 4 ticks in the height. And the reason why I bring it up is because what's going to happen in the trading room is at some point, you're going to hear Michael call out the highs and the lows of the current bar. Okay. So maybe this right here, this bar is forming, right? So Michael's going to start calling the highs and lows. So let's say we have a potential buy set up. Okay. If he knows in advance that the height of each candle is going to be 4 ticks in height, then what he can do, if all the rules apply, he can be proactive and place an order ahead of time. So what he ends up doing is he ends up putting a buy stop in, which is above the current market price, or he ends up putting a sell stop in if we get a bearish setup. So he's putting those orders in advance. So if the market does take off, okay, he has some representation. Or if the market just breaks down, again, he's in it for the decline. Okay, this is one way of him not missing any trades. Okay, because in the end, there's basically 2 ways you can get into it. You can, number one, you can be proactive like Michael, make sure you're putting the orders in advance, or you can let everything qualify and simply just go back into the DOM and left click at the current market price. Okay, if you're buying it, you're always buying it in the green and you're always selling it in the red. Okay, so again, you're either buying it on a stop or selling it on a stop, or you let the market qualify, trade signals there, then go inside the DOM and just left click at the current price. Okay, so the long-winded short explanation is you want to get on a 4-tick range chart because that's the same charts that Michael is using in the trading room. Okay, and the reason why I bring that up is because you're going to hear him call out the highs and lows, and I just want you to be mentally prepared that he's placing orders when he's doing that, because there'll become a time where the market's going to take off and he's going to say, yep, I am long, and then you're going to go, wait a minute, how the heck did you get in? There's no way you could have done that. Well, this is the reason why, and this is how he's doing it. Okay, so just letting you know ahead of time, that's how that works. Okay, so bottom line is we're on a 4-tick range. That's where it starts. Okay, let me switch guns here. Back to our little template. All right, so let's work on the top portion of the chart here. Okay, we're going to talk about the price action. Okay, so here, some buzzwords. Blue and red line is referred to as the MA1. Okay, the green line is called the BBC. That is short for bullish and bearish cross. So together, they make up step number 1, okay, which is this. When the MA1 is red and crossing the BBC, it's a bearish cross. If the MA1 is blue and crossing the BBC, that's called a bullish cross. Okay, so then the one that's highlighted here is a bearish cross because the MA1 is red. Okay, that kind of lights the match to the whole process. Okay, when that happens, okay, your antennas go up. All right, now we're looking for a buying or selling opportunity. Okay, note that I didn't say this. Go short, go long, go short. I didn't say that. I said we're looking for bullish and bearish opportunities, because what happens is after that step number 1, it kind of leads us into step number 2, which is this. After the cross, okay, the normal thing for the market to do is gravitate toward that green line or the BBC. That's what we're looking for the market to do. Okay, so now not only are we looking for the market to challenge the green line or the BBC, but we're looking for the market to close in the direction of the trend. Okay, that red candle, that's the down close. So if we have a red MA1, okay, so we should be thinking shorting opportunities. We're looking then for a red candle. Okay, if we get a bullish cross, okay, if we get a blue MA1, then we're looking for a green candle or a blue candle. Okay, ideally we want everything to be the same color. When everything is the same color, the probabilities are stacked in our favors. Okay, there's no other guesswork to do. When everything's the same color, there's no filtering. You just go inside your DOM and take action. Okay. All right, so we're into step number 2, which is the market gravitates toward the BBC and we look for a close in the direction of the trend. All right, here's the first curveball. Let me get my pen out. After this cross, I'm going to labor over this in about 15 minutes. As soon as you get that cross, you should engage your trend line, okay, on your platform. It's right here on DTPro, right there. So as soon as you get the cross, okay, so watch this. This is a bullish cross, right? Why? Because the MA1 is blue. Engage your trend line. It's right here. Left click. Okay. Why do we do that? Because we never know if the market is going to do the normal thing and get back to the BBC. Okay, we don't. After the fact we do, but we don't. All right? So we have to get in the habit of drawing trend lines. All right? The reason we do that, because if the market can't get to the BBC and we do close on the other side of the trend line, okay, potentially it's game on. It's potentially time to take action, get long, okay, if some other things down here in the oscillator are taking place. All right, so that is one reason why we constantly draw trend lines. So in our example here, okay, this one's form fitted pretty easily, right? We just draw the trend line, does the normal thing, closes in the direction of the trend, right? That's an easy one. Okay, that's easy and obvious. But here's another one where it doesn't quite get to the BBC, right? And also falls in the direction of the trend. All right. Here's another one. All right. Then falls in the direction of the trend. Okay. Here's another one. All right. So the idea is that you never know if it's going to get to the BBC. That's why you're drawing trend lines. The other curveball to that, and I will go over this a little bit earlier or later, is that in some cases the trend line is required. Okay. Now remember when I said earlier. All right, hold on. There's my phone. So stand by. Don't go anywhere. I gotta figure out how to turn this mute button on. 1 second. All right. Sorry about that. All right. So we got Jim. Jim was looking for a link too. So let me close out the inbox. Okay. So the reason why we get in the habit of drawing trend lines, okay, is because we don't know if it'll get to the BBC, okay? But the other curveball to that is, what if the cycle turns color on us, right? Remember what I said earlier, when everything's the same color, okay, that stacks all the probabilities in our corner, right? We like that. That's good for the home team. But if the cycle does turn a different color on us, then a trend line is required and a close below the trend line is also required. The fact that you're already programmed to draw trend lines in advance, if that happens, and then all of a sudden during the course of the trade, the cycle starts turning color on you, you're not fumbling around trying to activate a trend line and draw it after the fact. The trend line's there. If it happens and everything lines up, again, you're in a position to take action. Go inside the DOM and push a button. Okay, so what you're doing is you know the rules. Now you're programming yourself to go through the rules. Okay, so again, step number 2, we look for the normal thing. That is a pullback to the BBC and then it close in the direction of the trend. Okay. Big question I always get is, why don't you just throw an order in right at the BBC? Okay, look, you would have caught the top and made a bunch of money, right? No, because sometimes the market goes straight through it. So what you're doing is you're sacrificing price or action with that candle. Okay, that's a little hint or a variable that says, hey, maybe the normal thing is happening. So that's why we wait for the down close. Okay. All right. So we got step number 1, the cross. Step number 2, the pullback to the BBC. And then now our eyes are gravitating toward the slingshot. And guys, the trade setup exists down right here in our oscillator. Okay. And I'm going to show you why. All right. Put some buzzwords here. The red and blue line is referred to as the cycle. Okay. The green line, nothing fancy about it. It's just the green line. Okay. All right. Here's the scoop. Let me get my pen out. Here's what's happening down here in the slingshot. The cycle, it's red. It's got a nice slope to it. I want you thinking slope. Okay. When the market is going in at a 45-degree angle in our direction, that tells you the wind is at our back. Okay. So it's good that it's red, but it's even better when it's going down at a 45-degree angle. Okay, you should get excited about that. But what this is telling us is, dude, the momentum is bearish. All right, the cycle is red. All right, so we got a bearish cross, and we got a rejection of the BBC, and we got the momentum indicator telling us, hey, you know what? It's bearish. It's got a cool slope to it. All right, those are all positive things for us. Now, the normal thing is happening, right? The market pulls back to the BBC and it has a down close, and the green line is pulling away from the cycle like a slingshot. Okay, that's where this comes from. All right, the green line is pulling away. What it's hinting at is that this pullback is just a pullback in this ongoing downtrend on a 4-tick range in the NASDAQ. All right, that's what this is implying. Okay, this separation in between the green line and the cycle. Let me erase all the jazz. The space here, okay, is the divergence or the separation that Michael is talking about in the room. Okay, the pull away. Okay, so that is step number 3. Okay, the green line is pulling away from the cycle because the momentum saying, hey, it's bearish. And this price action together with the green line pulling away is, hey, this is just a pullback in an ongoing downtrend. And when you get that down close, that's it. You're going inside the DOM and you're taking action. Because here's what you expect. You expect this green line to pull away and then ultimately come down and touch the cycle. And what you expect price to do is follow along. And when that green line gets into the cycle, it's time to cut it loose. Take your profit. Because what you expect to happen now, green line pull away, get back into the cycle. Pull away, get into the cycle until the momentum changes. It's blue now. So now we're looking for the green line to pull away or get underneath it. And we create bullish divergence or bullish separation. Okay, that's what we're looking for. So in a sense, you're selling this top, buying this dip, buying this dip. Taking profit here, taking profit here, taking profit here, and taking profit here. That's why the trade exists down here. Okay, and all this action that's going on, okay, The number one thing that you should have on your piece of paper is the market trending, period. You don't push any buttons unless this market is trending. Now, it's easy to talk about and throw that word out there, right? But when you're engaged in the market, things are moving. It's not so easy. So I'm going to show you a solution that I think you should use to identify whether the market is trending or not. Okay, it's an easy solution, but that's one of the biggest traps that people fall into. They get caught in a sideways market, they don't even know it. It's not your fault, just you're learning, okay? But I'm gonna teach you something this afternoon, okay? So the market better be making lower lows when we're seeing this, or the market better be making higher highs when we see the momentum turning up, okay? And along the way, every trade has an 8-tick stop attached to it. So if you're brand new to the game, if you're trading crude or the gold, that's $80. If you're dead wrong, if you're trading the S&P Mini, that's closer to $100. If you're trading the Euro or the YM, it's closer to $40. Okay, so that's what you're signing up for. Okay, you're signing up for this. Day one of CFRN. Here's what your expectations are. You're not learning to pick the top, and you're not learning to pick the bottom and trade it from point A to point C. Nope. You're learning to take a piece out of the middle. You're going to be using an 8-tick stop behind every trade, and you're going to be aggressively moving the stop down. Moving the stop, moving the stop, moving the stop, moving the stop until the green line ultimately does what? Gets into the cycle. There's that buzzword, and it's time to cut everything loose. That's what you're signing up for. Okay? That's what I'm going to show you in the next round when we go inside the live market. Okay? That's it. Okay? You're signing up to scalp. You're signing up to be in front of the screen. You're signing up to be, learning how to push buttons in the DOM. You're going to be active. Okay? That means a lot of trades. That means a lot of break evens. That might be a lot of -8s, break evens, +8s, all that kind of stuff. Okay? That is what you're signing up for. Okay? So, everyone's different. The good thing is, in the end, can these same rules be applied to larger time frames? Absolutely. I use them all the time. So they can be used on dailies, hourlies, 30 minutes, 5 minutes. That's what logic is all about. Okay, the larger time frames. Okay, so if you're into larger time frame swing trade stuff, yes, the rules apply there. Yes, the setup's there, but also can be applied with what Mike's doing in the morning. And that's why you're here to learn how to scalp a little bit. Okay, that's why you're knocking on this door. All right. Any questions at this point? Oops. Let me get rid of this. All right, let's do this. All right. I'm in demo mode, okay? Close down the live account because I have positions in there and I don't want to mix things up and screw everything up in front of everyone and go into panic mode. So I'm in demo mode, I'm just being very transparent about it. All right, let's do it. Let me get my, let's start with this arrow. All right, number one, the first thing that should be on our piece of paper, that's what we talk about now. Are we trending? Are we trending? We're staring at the S&P Mini. Here's the solution. Get in the habit of hitting the zoom out button right here. Okay, the magnifying glass. 1, 2, 3. Just a few clicks or 3 clicks will make the difference. Okay, I'll tell you why. A lot of times you're staring at Mike's charts, and this isn't bashing him. Okay, but you're looking at charts blown up, right? In columns. There's 4 charts floating. So things are kind of really zoomed in, right? So what might look like, you're looking at a chart, something might look trending on his chart. You take a few minutes to zoom out, zoom out, zoom out. You might find that you're in chop and you don't even know about it. because you don't know what's going on over here on the left. You have to be able to look left, okay? All the action is over here, all right? This looks easy, okay? We're trending, right? We're going higher. Okay, there was a few speed bumps along the way, right? Like a double top there and a double top there, okay? But the market needs to be making higher highs or we don't do anything. The solution to that, if you find yourself spinning your wheels or getting stopped out, this is probably why, okay? You're in chop, you don't even know it. So hit the darn zoom out button, okay? Right here. Notice how there's no space over here, right? Okay, that lets you know we're trending. Okay, there's no obstacles over there. All right. We've defined we're trending, right? The normal thing for the market to do is do what? Pull back to the BBC. Starting to do that now, right? What did I just say a few minutes ago? We got to get in the habit of after the cross, bullish cross. Why is it bullish? Because the MA1 is blue. The reason why we engage the trend line, okay, because we don't know if it'll get back to the BBC or the green line, right? It's doing it now. Okay? We never know if it's going to get to the BBC or at curveball, the cycle might turn a different color. We said earlier when everything's blue or the same color, okay, we want it to blue. We get an up close here or a green candle, we like everything to be blue. This is red. So the first thing that should pop up is red cycle, wrong color, waters down the probability. That's a problem. Okay. So now we're looking for the up close. That's what you're waiting for at this point. Is the trend line required? Yes. Why? Because it's red. Okay. Is a close above that trend line required before we can take action? Yes. Why? Because the cycle is red. It's a different color. Okay. So that's what's happening right here, right now. Now here's the trap you fall into, and you may not even know it. Okay, you're excited because the market's moving and it's pulling back to the BBC. Okay, are we trending? No, we don't have a new pivot high. Okay, be careful. We need to be making new pivot high. See, like here. Okay, we barely. That's a double top to me. This is a double top to me. So even if we produce a green candle here, all right, we stop trending for the time being. All right. Let me also point this out too. Red, we know, waters down the probability, right? Look at the slope of that. Now it's against us at a 45-degree angle. Okay. That means we're swimming against the tide here. Okay. Right there is the second trap. Okay. A lot of times, okay, Michael is getting in the trades with different MA1 or different cycles, right? Here's one good example. Here's a perfect example of it, right? You do the right thing. Hey, the market's pulling back to the BBC, so I'm doing the right thing and drawing the trend line. Oop, there's an up close, right? There's the up close. Okay, I know the trend line's required, and I know it's required, and a close above the trend line's required because the cycle has turned red on me. Okay, and I know it waters down the probability. Okay, but here it's flat. Okay, if the cycle's red or a different color and flat, well, this is fair game. It's game on. You can take action. Notice the separation with the divergence. Okay, notice the difference. This is different. We get the up close. It's above the trend line, and look at how this is curled over. Okay, that's a no-go. This is okay. All right. So when you see this, you have to step back and say, hey, wait a minute. That's something that Bert said in that webinar on Thursday. If it's against me at a 45-degree angle, don't touch it. Okay, now, the question I always get over the years is, well, how do I know if it's a 45-degree angle? Okay, well, I can get my pen and I could, cut up the square at a 40. Here's the deal. If you have to ask yourself the question, is that a 45-degree angle? Well, that looks like it's 30 or 25 or 30. You even have to ask yourself those questions. Don't push any buttons. It has to be easy and obvious. Okay, that would be my solution. Okay. Now here's what ends up happening. Okay, because I've done this for almost 25 years. You get this, and and you say, hey, Bert said not to take it, and you get a market that does this. And you're like, he told me not to do it. Damn it. Okay. Look at all the money I missed. All right. The whole idea behind this is, generally speaking, this is indicative of kind of like a cycle reset. In other words, the market will, what this is indicating is sideways or a retracement, maybe in a larger uptrend. Okay. So eliminate the risks. Okay. If you're faced with this, don't touch it. Okay. There's some history behind it, but this will cause you to say, forget what he said on Thursday. I'm going to take the next one. And I guarantee that'll be the one that stops you out. Okay. Just takes a few of these to kind of hypnotize you. Okay. I've been there and done that myself. So be prepared for that. Okay. All right. So enough of that. That provided a couple examples there. So that's why I got excited about it. Let's switch guns and go to crude. Okay. Zoom out, zoom out, zoom out. Notice that's the first thing I do. Okay. Notice trading sideways for a while, right? Inside the box. Okay. And then just now we busted out of it. Are we trending? Yeah. I don't see any obstacles over here. So that's good for the home team. Okay. So the other thing is too, look at dynamic resistance. Dynamic resistance was busted pretty good, right? So that should give you some confidence that we're trending. Okay. So right now, crude is trending, and we're going to look for the market to pull back toward the BBC, which is the green line. So what do we do next? Activate the trend line. So let's get ready to rock and roll here. Okay. So if she pulls back, it takes 2 candles to connect the dots. Okay. Once we do that, I'm going to show you how my trend line. Okay. So we're staring at March crude on a 4-tick range. We're looking for the market to pull back for the BBC because we know that's the normal thing. This is good for the home team so far, right? A blue cycle with a decent slope. If price starts heading back down, the green line should get back underneath it and create that separation we're looking for. Okay. With time, you'll start seeing that in advance. Okay. This is day 1, day 2. You don't know what the heck I'm talking about. But we do know is that the market should gravitate toward the BBC and we're ready to draw a trend line. Okay. Let's see if we get another red candle here. Okay. If that happens, we will go inside the DOM and left click or do something here in the green. Okay. If we want to get long, we click in the green. If we want to get short, we click in the red. Okay. Telling you in advance. Okay. The other thing, while this is happening, notice as I push this button on top of the DOM, the bottom of the DOM opens up. It's called the bracket. Okay. Still wait. Okay. Notice sell stop and buy stop is checked off. Not the limits, just the stops. If you right click over it, go factor in ticks, right click over, factor in ticks and make those 8s. That's our 8-tick stop that's advertised earlier. So what that means is as soon as we get into the trade, that is automatically going to put a stop 8 ticks right behind us. Okay, so we don't have to do any more clicking. All right, so that's a cool advantage to have. Okay, so that's what we're waiting for. We're waiting for the pullback. So let's see if we get it here. Come on. All right, so while that's framing up, I will get back to this because this one looks pretty juicy. Why? Because we know it's trending. See the air pocket over here? Okay. Before, if you're staring at this, right? This is choppiness, sideways. Let's go to the natural gas. Are we trending? Right now we're sideways. Okay, we have support here, we got dynamic support here, we got resistance here. So we're kind of stuck right in the middle. Okay, natural gas, there's nothing going on. We were congested here, and notice how we broke dynamic support. So this was comforting to know at this point, hey, we're trending again. Okay, we got the pullback to the BBC right here with the down close, but look how messed up the cycle was. It was a different color, not good for the home team, and it was pitched at a 45-degree angle. Okay, sloppy action. Okay, would have resulted in a stop out if you would have done that. Okay. All right, so maybe we're pulling back here. All right. So here's how the trend line is going to look, like that. Notice it's in top of the wick, corner of the body. So note, we have a blue cycle, and we have separation. All right. This is where Mike gets proactive. Okay. If the low is 70, the high has to be 74, then you should be right-clicking in the green at 55.75. Okay. Cancel the order. The low is 68. Add 4 to that. The high should be 72. Okay. You right-click at 73. So what am I telling you? Add or subtract 5 from then the current high or low, and that's the number you push. That's the price that you right-click on. Okay. If the low is 68, add 5 to that. You're going to right-click on 73. 55.73, will that be a close above the downtrend line? That's the other thing that you have to equate. The answer is yes. Okay. So if it gets up here, we will get long. Okay. We have a lower low. Cancel the order. Okay. If the low is 67, add 5, right click at 72. Okay. See what happens. Start to get it here. So we can either right click and be proactive, or get out of my way. We wait for the up close and then left click in the green. Okay, again, proactive is what we have working right now. This is what Mike's doing in the training room. Or the other solution is you wait for the up close, go inside the DOM and left click. Okay, that's how you do it. 2 ways. All right, I'm doing it the proactive way. You're going to see that in the training room. Okay, so let's see. Just waiting for it to qualify. Okay, we have a blue cycle. We have separation. That slope has disappeared, but it's still blue. Okay, ideally, this would have been better, but it's still blue. All right, so we have a new low, right? Cancel the order. All right, if the low is 66, right click, add 5, 71. We have touched the BBC. All right, it's done the normal thing. Okay, cancel the order. If the low is 64, add 5 to it. 69. Will 69 be above the trend line? It should. Is the trend line now required? Yes. Is a close above the trend line required? Yes. Because why? The cycle has turned red. Okay. Now it's just watered down the probability. If he starts curling over a little bit here, we'll cancel the order and move on. Okay. So it's taken the highest probability, we put it into a different category. Okay. Because the cycle has turned red. Notice how the trend line was drawn in advance. Okay. There's no fumbling around with the trend line now. It's already there. Here we go. We might get it here. So if the low is 64, add 5, the high is 69. 69 put us over this trend line? Yes, it would. Okay. Is this the ideal trade? No. Why? Because now the cycle has turned a different color. Okay. So let's see. Are we trending? Notice how I hit the zoom out button. The answer is yes. We've made higher highs because there's no obstacles we're staring at over here, right? There we go. It's trying. Now what I want to do is, as soon as this qualifies, if we get into the market, I'm going to show you how to move our stop up. By the way, right here is our stop loss. Okay, that's it. If this gets tripped. Good, I'm glad that wasn't for us. Come on, rally for us so we can talk about something here. Win, lose, or draw. Oop, Bart's here. That's just a tool tip. I'll show you in the second part, or we can go offline and do it. It's called tool tips. When you hit this properties box here under current profile and look for crosshairs, tool tips, you see how it's on, yours is off. All right, properties box, current profile, crosshairs, show tool tips, and then you'll be squared away. Okay. I'm hoping this thing qualifies, guys. Do you guys see my camera, by the way? Can you see the camera right here? You just see my screen, or do you? Okay, good. All right, so hold on. Let's see if this thing. So again, you guys understand why. When you know the low, okay, in this example, if the low is 64, we know the high has to be 69, right? We know that, or 68. The candle is defined, okay, with another tick. It takes that fifth, okay, the fifth tick to create the new candle. So that's why we're adding and subtracting 5, okay? So that's why you just keep the math easy. 64 plus 5, 69, right click. Of course, we're kind of laboring here. Time is it? Oh, it's only 1. All right, this might do it here. Come on. Go, go, go. Oh, geez. Come on, guys. Okay, we're just waiting patiently here. Okay. This doesn't happen shortly. I'm going to switch guns on you. Okay, we'll look at a different market together. I want to kind of stay on point here because this has a lot of good things to it. The only thing it doesn't have is this red cycle. Okay. So in a nutshell, if this does qualify, what we'd expect to do is the green line to pull away like it is, and then ultimately do what? Get into the cycle. Okay, so this is what will happen. Okay, it'll be something like that. And what we would expect to happen is the market hopefully make a new pivot high. Okay, and then along the way we'll move the stop up. Okay, so the rules of engagement on the stop. If it goes plus 4 ticks in our favor, we move the stop to our entry. Okay, our entry would be 69. Okay, or a close. All right, so here we go. Game on. All right. So we got the up close above the trend line, right? There it is. All right. Here's our stop loss. By the way, you should have this little working orders tab is up. Okay. Here's our stop loss right here. It's also in this box. Okay. Now, it goes plus four ticks in our favor. Okay. And we got some slippage, but either way, if it goes plus 4 ticks, we're going to move the stop up. So how do you do that? Okay, we noted this is our stop, right? Left click over it, hold the mouse down, and drag it up and release it. Drag it up and release it. Okay, that's all you have to do. Okay, so hopefully this thing moves up. And notice every time I do that, watch the box over here in the price. This changes. Okay. Okay. So that's where our stop is. Okay. So this is important to have because at the end of the day, or at the end of this trade, this box should be grayed out. Okay. So if you have any loose orders working, let's say, hey, I got out of the day, I'm done for the day, or I'm done with this trade. Okay. If you have any outstanding orders working, it will show up in this box. All right. And I've seen people do that, and they wait. I get a phone call. I'll call them up and say, hey, this happened in Dwayne in the beginning. I'm like, Dwayne, do you know you're short the S&P mini? He said, no, I don't. Okay. Well, if you have this box open, okay, that'll solve that issue if that ever becomes a problem. Okay. All right. So I'm going to minimize that. So as we watch paint dry, I'm going to switch guns on you. Okay. So I'll put an alarm in here. Okay. That tells me I need to get back to crude. But let's go look at gold. So I want to look at many examples as possible. This might happen to you. If you're on a single thread, this is a possibility. Okay. If you draw any trend lines and you switch to a different market, that trend line is going to be transferred over to the new chart. You'll be staring at something like this. Okay. What you'll have to do is just remove it. Okay. And then it'll look good. Okay. So we're staring at the gold now. Okay. What's so cool here is that we have a bullish cross. That one's pretty easy to pick out, right? So the normal thing for the market to do is pull back to the BBC. That's our little green line here, right? That's normal. We need to make a new pivot high here. We got a small double top that we have to compete against. Okay? So right now we don't want to take any action. I'm going to zoom out. Are we trending? Okay? If we get above dynamic resistance here, which is now a double top here, you can't really blow it up a little bit. Let me do this. See that? and see that if we get north or over the dynamic resistance dots, then I'll feel comfortable that, hey, any pullbacks we'll try to get long, okay? What's cool is that we got a blue cycle, right? And the green line's pulling away. So we have step 3 of that separation that we're looking for, okay? So that one has a lot of things going for it. It just needs to qualify, okay? All right, so let me go back to crude. Okay. So when we go 3 ticks, all right. If we go 4 ticks in our favor, okay, or we get a close on the other side of the MA1 here, right? We're going to move the stop to our entry, okay? Now, we should have been filled right here, 68 or 69. I got some slippage, all right? It is what it is. So the point is your stop would be at your entry if you got filled at 69 where we were supposed to, okay? I'm just going to keep it as is, but that's the rules of engagement, okay? So if you got a better price than me, okay, then get it to break even, all right? So we'll let it trip off. So if we get to 74, then I'll move mine up. All right, so let's go over to, let's go down the currencies. Zoom out, zoom out, zoom out, okay? We had a bullish cross here, right here, ME1's blue. Okay, we ran into some dynamic resistance. Notice how we start trading north of it. Okay, that should give you some comfort that, okay, it looks like we got knocked out. So hold on. Right there at the dead low. Thank you very much. But, so let's go over it. So let me get rid of this. Okay. So here was the entry right there. All right. And the entry was there because we drew the line and this was a close on the other side of the trend line, correct? We identified that it was trending. We identified that this cycle is red. That waters down the probability, so that's a problem. We also identify that a trend line is required, right? And it's required because the cycle has turned red, okay? So this is a valid setup, okay? So at 55.69 is the long entry, okay? You add 4 to it, your stop is at break even, okay, or the entry price. So the result is break even. I got filled at 70, okay? I was stopped out right here because that was 8 ticks away, okay? I didn't have that chance to move it up, all right? So in all fairness, all the rules were there, present. This one just didn't work out. Was it that easy and obvious trade? No, because the cycle was a different color, okay? So everything was done right. It is what it is, okay? But it wasn't the highest probability because the cycle turned red on us. All right, so let's go to the S&P. Okay, so we want the S&P to make a new high before we even think about going long. And look at how the cycle, how messy this looks, okay? So nothing to do there. So let's go down the line and see if we can't find anything else. So we were talking about the euro. We had the bullish cross, and we're looking for the market to do the normal thing, okay? Here's the normal thing right here. Pull back to the BBC, okay? Trend line is required. Your trend line is required because the cycle is red. That's how your trend line should look above 2 wicks. And this is the first close above that trend line. Okay? If you are a CFRN member, you know that is a momentum trade, right? So you guys know the rules of engagement on the momentum trades, right? As soon as it goes into profit, move the stop to your entry. Okay? So that's the euro. So right now, for the moment, we're standing at parade rest. We're not doing anything. British pound. Zoom out, zoom out, zoom out. Are we trending? No, we're sideways. If you're not sure, look at our dynamic and support and resistance dots. I have them highlighted, but look at how they're side by side. That's a first indication. If you're not sure, first of all, if you're not sure, don't push any buttons. But when they're side by side, we're not trending. Okay? Again, side by side, not trending. Switch guns. Swiss franc. Zoom out, zoom out. Okay? We seem to be caught in some chop here, so I'm going to table the Swiss franc. Aussie dollar. Fell off a cliff here, right? That's encouraging. Here's a concern right here. Okay? So would I expect a bounce? Yes. Okay? Your trend line should be drawn like this. Okay? There's a blue cycle. The trend line is required, and it closed below the trend line is required, which happened. Okay? Right there. This has a bullish tilt to it. It's got that 45-degree angle. You might say it's not quite. Okay? It's not easy and obvious for me. It's got a little bit of a tilt to it, so that suggests chop and maybe a potential uptick. So with that being said, we're going to table the Aussie dollar. Okay? Canadian dollar. Zoom out, zoom out. Like the crude, which you would expect. Okay? There's an air pocket here. We are trending. Okay? Notice how we did break dynamic resistance. Even if you weren't sure, this should give you some comfort that, hey, we are trending. Okay? So right now, if we get a pullback to the BBC, we'll consider it. What will happen is that this cycle will probably curl over. It's already red and disqualify the trade anyways. But in advance, we know, hey, that's going to be a problem, right? And a trend line will be required. So we're going to table the Canadian. Mexican peso. Okay. Here's a good example of the cycle blue and then starting to curl up and what the market did. Okay, this is what should normally happen when we see this. This is good if you're short, right? Red and a good slope. If you're looking to get short on this candle, this isn't good. All right, this action. All right, so keep that in mind. If the cycle turns a different color, you're asking for trouble. Okay, if it's flat, okay, this is fine. She starts curling up, you have a decision to make. Okay, you have to decide whether you're going to go down that slope or not. Okay. All right, let's go down the line. Japanese yen, zoom out, zoom out. We are making some lower lows, but we are finding a little bit of support here. Okay, so we're not going to do anything in the yen. Okay. All right, so let's go. There's the crude, and notice when that turned red, it just curled over. Okay, that's why we use stop losses. Nothing in the natural gas. All right, and minis are making new highs. So we'll look at the S&P here, see what happens. So notice where we're at on the cycle, right? It's blue. Okay, so what's going to happen here? So market's going to have to go up a little bit here in order to get that cycle up. All right, and then at some point from that rally, we'll have to pull back. And what will happen is then the green line will finally get under the cycle, and then we'll be in a position to get long. But a few things have to happen here, okay? So see how this will get a little bit overbought, okay? So we'll need a little bit of a pullback. Let's take a look at gold. Okay, here's the pullback to the BBC with the up close, right? Here's the bullish cross. However, we have this little double top that we talked about earlier, right? With dynamic resistance printing, all right? So if you weren't in tune with that, you'd be right here, okay? Because you'd have the bullish cycle, a blue cycle, and the divergence, right? This is where you would be in this point of time, okay? So it may or may work out. We're not sure yet, okay? But that's the trap that I was talking about earlier, okay? You want to let this market make higher highs, okay? It's a little hypnotized here because it's not so transparent right here, okay? So let's close that out. Let's go look at the Dow. Zoom out, zoom out. We got some higher highs here, okay? Right? We had a little bit of resistance here, okay? Here's a trend line. Here's a close above the trend line right here, okay? Blue slope with some divergence, okay? Not a lot of action here, but this right there actually is a qualifier. The result's might be a break even because your entry would have been here, so we don't know yet, okay? All right, it's getting closer to 2 o'clock. Let me say this too. If you are excited about trading the Dow or the NASDAQ, okay, I know those markets are moving, okay, and they're fast. What you might consider is going to an 8-tick range chart, okay? That'll slow things down, okay, and then allow you to trade those without having to be, speed racer on the mouse, okay? So consider the 8-tick range chart. The only difference is your stop is 16 ticks, okay, not 8, be 16. The benefit of that, right? If you're on a larger time frame, then you should be going for larger targets, right? That'll give the market more room to move up into the cycle. You should be able to get bigger gains, okay? If you're interested in that type of thing, taking on a little bit more risk, maybe get a little bit more out of the market, then even with the ES, consider the 8-tick range, okay? In fact, here it is right here, okay? There's a spot right there, okay? Here's the spot right here. So there's nothing wrong with it, but just remember, okay, your stop is going to be 16 ticks, not 8. So you have to consider that. Do you ever jump on runners, or do you always wait for a pullback? I don't do the momentum trades. I do wait for the pullbacks. Todd, I wait for at least, that's a good question. I wait for 2 red candles. If I'm in a bullish scenario like we are now, right? We got this blue MA1, I'm thinking buy, 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 right? I am looking for 2 red candles, and then I'm connecting the dots. That I'm comfortable with, okay? The blueprint, okay, and Mike has said this in the room too, it doesn't matter what color these candles have to be, right? I don't know if I can show you, okay? This could be a trend line. It takes two candles to connect the dots, right? That is one right there. That's a legit trend line, and that's a legit close above it, okay? What I'm looking for is that flagging, okay, that pull back to the BDC, okay? Just a preference. I believe that nothing goes straight up or straight down. Okay, that's how I'm wired. So I'm always expecting some kind of a pullback. It could be shallow, it could be deep. What we can kind of predict is the normal. At some point, we got to gravitate toward this green line. Whether we get there or not, well, the market just tells us, right? We don't know until after the fact when we're dissecting the charts, right? But in real time, you don't, okay? So the best you can do is draw trend lines, okay, and be ready to rock and roll if it doesn't, okay? So yeah, to answer, that's a long-winded explanation of, yeah, I like to buy pullbacks. All right. All right, so now we're going into chop here, okay? I pulled up a 30-minute because I know we have some logic guys in here, okay? The same rule applies, same rules apply, okay? Just remember that if you get a bearish or bullish cross, okay, here's a typical day for me, okay? I might have someone say, look, I want to get short the S&P. Where do I get short? Okay, well, there's a few stuff that I look at, but one thing that I would suggest, okay, is, I don't know, look at the 30-minute chart and maybe look at the BBC as a form of an entry, okay? So the same rules apply, but on larger time frames, okay? So we had a bearish cross, all right? So I would wait, okay, until we got some kind of pullback to the BBC before I would consider short. The slingshot is a hot mess, so we know that's not right, and it's definitely swimming against the tide, right? It's blue and it has a bullish slope to it. This is what we want to see when we want to get long, right? Not short, all right? So consider that, okay? Consider it. So here's another observation, okay? Longer term stuff. The cycle's pinned up to the top here, right? At some point, the green line is going to pull away, right? It's going to have to come back to reality, okay? Just like it did here, right? And what does price do? Gravitates toward the green line, right? It gravitates with this green line. So here, at some point, okay, the Dow will probably do this. Up, it's getting pinned up like almost like an overbought scenario, and then it'll adjust itself. And then what you might expect is, where will it pull back to? Okay, and then we know the answer to that. Okay, it could be at least back to the BBC, or since we don't have a bullish cross, it might be the MA1. Okay, those would be the levels I would expect for those markets to pull back to. Okay, so consider that if you're on a larger time frame. Okay, yeah, nothing wrong with that. Oversold here, right? At some point, that green line is going to have to adjust itself. Price follows along. Okay, the Dow is in that position. My gut feeling is it might clip this high, because if anyone's short, that's where their stops would be. So what I would expect maybe to happen, if that's going to be the scenario, get up here and then pull back. Okay. All right. So let's try one more. Let's take a quick look. Sideways chop. Okay. Back and forth here. Crude. We have a bearish cross. Zoom out, zoom out. Okay. We might have a bearish cross here, but we have support here, right? See the air pop? This was sideways, right? We get north of it, there's nothing over here, right? So we know it's trending. Okay, complete opposite is happening. We have the bearish cross, but notice when we look left, there's a lot of obstacles here, right? Didn't have that over here. Even though this crazy thing didn't work out, but we have a lot of obstacles, okay? That means we're sideways, so we have to be careful. This is probably going to act as support. So this action should be here, here, and then it's anyone's guess, okay? That's what I would expect to happen. So we're caught sideways there. Natural gas is the same way. All right, so it's a little after 2 o'clock. The only thing, so the takeaways, number one, trend lines. After you get the cross, engage your trend line. That's your first order of business, okay, when you get the cross. Number two, the big trap that people fall into, trending markets. The zoom out button here is going to help with that, okay? That will allow you to see what's going on over here. Left, okay? Good example of that, okay, was that crude oil, okay? There's nothing over here. So we felt comfortable that it was trending, okay? As it turns out, there was a setup here. We actually took the setup, okay? The result should have been a break even, but with some slippage, it didn't. But the bottom line is this was turning a different color, okay? So that was warning us that might be a problem, okay? So easy and obvious, okay, would be a bullish cross, a blue cycle, even a blue MA1, okay, and then we start getting the pullbacks, okay? When everything is the same color, it stacks all the probabilities in your corner. Does it happen all the time? Nope. You're going to do less trading. But I think at the end of the day, when you review your trades, and by the way, that's a good thing to do, when you go and dissect those wins and losses, okay, take the notes. Okay, was everything the same color? It just didn't work out. I could live with that, okay, than living with, hey, you know, this was kind of sketchy, iffy, that wasn't the highest percentage one. Okay, so just things to consider. All right, so the trend lines, the zoom out button is a big deal. The slope, whether it's good in our favor or against you, when it's against us, those are things to consider. Okay, and if you are trading some of those larger time frame markets, the rules still apply. Okay. The question is, where do you put your stop loss? That's a very good question. Okay. So if you are trading here, this is very simple. Okay. If you're trading on a 30-minute chart, you should be risking $30-minute dollars. Okay. What does that mean? That means if we see if I can give you a good example here. It is 312. If we get the pullback and we get an up close, okay, then your stop is going to have to be under that 30-minute candle at least. You don't know what that's going to be, right? On a 4-tick range and an 8-tick range, we know the height of each candle is 4 ticks in height, right? But on a 30-minute, we don't know. So you're going to have to risk $30-minute dollars. Now the question is, are you comfortable with that? The good thing is you should be going for 30-minute returns. Okay. So that's something you have to sign up for, or, check yourself at the door whether you want to do that or not. Okay. So that would be my answer to that question. Okay. And that's it. I think in the end, hanging out in the training room is going to be good because you're going to be learning the personalities in the markets that you're trading. Okay, you might be trading the ES forever. You may not make money on it. Maybe it's time to scrap the ES. Maybe the personality of that market doesn't fit yours. Okay. I don't think there's a problem trading 4 or 5 different markets in the beginning. I think at some point you'll whittle it down to 2 or 3. I think at this point, if you're brand new, you want to see more examples, more examples, more examples. So spending time in front of the screen is a big deal for you. The more examples you see, good or bad, is going to be to your advantage. Physically clicking in the DOM, placing orders is a big deal. Okay. And reviewing your stuff, especially if you're live. Good and bad, just review them. Okay. What was the trade that I took? And go through the motions. Bullish cross, pull back to the BBC, you know, was all that there? Okay. We had a bullish cross, right? We had to pull back to the BBC. We had an up close. We had a blue cycle. The green line was pulling away. Well, wait a minute. Why didn't this work out? Why did I get stopped out? Because we weren't trending. Okay. You saw this. I get it. Everything was there, right? Okay. Zoom out. Zoom. Oh, that's right. It's that one thing that Bert said. Zoom out. And if I would have done that, I would have avoided the stop loss. Okay. So review your trades. That should help. Okay. And if you have to zoom out, you know, if that's the solution, or if it's turned color on you, you know, the cycle against you, you know, what was the situation? All right. Put yourself in that situation and find out, you know, what the story is. Okay. So that's it. So every Thursday for an hour, I hammer over this. I go over the same stuff over and over and over and over again. Okay. If you can't catch an episode, go to YouTube, search CFRN Thursday, and they're all recorded. I have them saved in there. So you can go back in there, and I labor over the same stuff over and over and over again. Okay. And I think that's the best way to learn. I'll be here next Thursday for another hour. Be in the room. I'm in the room every day. I'm just in the background letting Mike do his thing. Okay. I know if you're brand new, things are, you know, coming in fast at you. Okay. I get it. This is, you know, this is a good syllabus to lean on. Okay. This has been around from day one. Remember in this disclaimer, I talked about past performance is not necessarily indicative of future results, right? This is a snapshot. I think even Mike took a picture of this. This was back in 2012. So nothing's changed. Okay. The rules are there. Okay. Other things have developed, right? We got all these different trade setups. Okay. It's been around from day one. So I don't know. All right. So that's it. I'm going to shut it down. If you have any questions, call or shoot me an email. Okay. Sorry about that crude trade. There was only one there, one good example, but everything was there. So that's the best we can do. And I got to learn how to shut this down.